Hello traders, how are you doing? It has been a while. All right, so remember I said August is my birthday month, so I am going to be dropping strategies, right? So that those of you that want to trade can actually trade, right? With just the basic information. So now today I am going to be teaching you guys how to use the 250 EMA for trading. All right. So, right, how does this thing go? First of all, to see that these things have been put, they're showing here. All right. So the settings, let me just show you the settings. You'll come here, style, I put blue and all that, but the length, it's 50, source is close. Okay. Here, put none like this, and then just go to OK. If you're using your phone, also just go that side, put 50. It has to be exponential moving average, okay? Make sure that it is exponential moving average. And then for our 200, it's going to settings, inputs, length is 200, source, close, type, here put none, then just click on OK. All right. So now, before we do anything, what do? We deal with our time frames. All right. So with our time frames here, we are in our 4-hour time frame, and according to what we are seeing here, this cross right here, right, it is telling us that the market is going up, okay, on 4 hours, right? This side here, the market was going down. Check, we had a downward cross and the market sold. Can we all see this one? We had a downward cross over here and the market sold all the way down to here. So this is money. This is money. If you know how to enter, how to add positions. So now there's something called swing traders, position traders, day traders, scalpers, okay? So it depends on what you want to do. Also, it doesn't really depend on what you want. Sometimes it depends on the type of trade that you find. A good example would be this upward cross here. Can you see this upward cross here? This one was going to be a scalp because of how it went. It didn't really go for long, right? But for something like this one, you could have actually done a swing all the way down here, okay? Or maybe a day trade, because these are the 4-hour candles, taking profit first of all at this low here. Remember, support, resistance, but right now I don't want to confuse people, all right? So let's use our indicators, okay? So here, a good example, I want you to then go and then back test this thing on our 4-hour time frame. We are being told that our market is going up, okay? From here, we had a cross here, okay? Then market consolidated here when the cross was happening. Then after the cross, we saw ourselves breaking this candle and we went up all the way there. Okay, so let's see what happened in this area here in the lower time frame, because entry after this happens here, we first have to go into our lower time frame. So let's mark this zone here. Let me just use this trend line tool, but I'm going to put it up straight like this so that I see what happens, what happened after the cross. Okay, something like that, because I want to show you what you should search for. So here's our cross on 4 hours. Let's go into a lower time frame and see what happened. I want to try my 1 hour. How many minutes is in 1 hour? 60. Okay, let's get into 1 hour time frame. Right, as we can see already in our lower time frame, we had our cross happened a long time ago down here. Okay, so there we go. Our cross happened here a long time ago. right? And after this cross, we had an engulfing candle, okay? A bullish engulf from this candle here. This green candle here engulfed this small red candle after cross. So that one is a strong buy signal, okay? Right. We still want to deal with our 4 hours. Remember, you can go from your higher time frame being your 4 hour time frame or your 1 hour time frame. It depends with these things, but right now I'm using my 4 hour time frame. So it means after cross, right? The cross has happened on 4 hours here, right? What do? We first have to wait on the lower time frame, which is our 1 hour time frame. We first wait for this market to reverse and come down here, and then when we see our 50 moving average, this one here, being when we see a bullish candle, which is a green candle, closing above the 50 moving average, we can now enter a buy, which means that we would have placed a buy here. We would have placed a buy over here. I like using this thing. We would have placed a buy over here the moment that this candle closed. Okay, this was where our buy entry was going to be. But remember, we have our 15-minute time frame, right? So we now have to go down. Buy entry. Can I just type here and say buy entry? Can I write 1 hour or just say H1 like that, right? Now I want to go into my 15-minute time frame because I want to see what was happening there. Remember, that's our entry time frame when we're coming from that side. Watch this. Look how beautiful that is. So according to 1 hour, we would have entered here. But according to 15-minute time frame, this was not a real entry zone, or to some degree it was, because our 200 also had a bullish candle that had closed above it. So this one is a strong confirmation. So now when you come in here, this one is called an early entry here. It is a safer entry because your stop loss would have to be down here, right? Stop loss. If the market goes against you, you don't really put it at that weak, but you would have been there. So it would have been stop loss. So then that means it's less it's less risk, right? Because entry is there, stop loss is here, right? I hope we are together, guys. Let's walk together. All right. And then we would have entered here, right, according to the one hour time frame. Market would have moved up all the way there, then start to consolidate here. You hold. Remember, your official first take profit is somewhere here, like above this week here, because this one is the previous high. Okay, so let me just put and show you what would have happened. I love showing these things on live trades, but I'm figuring something right now that I'm not yet getting that much time to actually show it. So for now, let me just do this. Sorry about that. I want to add text there. This is take profit. So I just call it TP1. So this is TP1, meaning you would have taken your trade here. Okay, let me put my long position to see what would have happened here. Okay, I want to see what would have happened if I had opened my buy from here, my stop loss down here. This one calculates for us everything, our risk reward and our target and all that. So there we go. See, so you would have risked 1 is to 2.7, which is actually good. Meaning if you had risked $1 here, and then my advice usually traders, right? When you come into this place here and you see that you have a trade, right, that can run a certain way, when you first enter here, my advice usually is don't enter with a big lot, especially with these volatilities. Even with boom and crash, start with a minimum lot so that in as much as you are risking here, you first test. Then when you see it breaking and going, because remember here, we have broken our 200 when we first enter, but the 50 isn't yet broken. So when you see it breaking 50, you can now enter a second position, right? Minimum lot, right? Then when you see it coming here and it's consolidating, it's consolidating, it's consolidating, officially this would have been the first take profit. For those that are really afraid, they would have just taken their profit there. But I would have taken my first take profit up here. Okay. So what happens then is that when you add positions little by little, your account doesn't bleed. So when you see this happening here, then you see a bearish candle coming here. Remember, you still have got two positions, right? You wait. Okay, there's this candle next. This is 15 minutes. You wait, right? You wait because the 50 has been broken. So usually there's a break and a retest. So you wait for your 50. Since 50 has been broken, wait for 50 to be tested. After 50 is tested, you now put in positions, meaning what? There we go. We had a buy here. We are riding it up there. We are riding it up there. We're seeing we have gone up there. It comes back down here, right? What do we do here? We wait. Now we've had our bullish candle. The moment that we see a bullish candle here, now we can start to risk, knowing that, okay, you know what? The market is about to go. Okay. Then our positions that we enter here, we place another buy here. So it means if you are going to be trading like me, you will enter a buy after this bullish candle here, okay, like that. This is on 15 minutes. Now when you've entered your buy here on 15 minutes, buy entry here, I've got caps lock. Okay, buy entry 15 minutes. Okay, then our stop loss for 15 minutes is here. My 15 minutes stop loss for these positions, because I don't want my account going down, is here, the bottom of this candle, but not exactly there. You leave breathing room because they might sweep you out and then continue in your direction. Okay, so this is how I see entries, but I don't want it to be there, like there. Okay, they just carried that wrong thing for me. All right, so this is it. What does market do? It first reverses, it comes down here to my 50. Remember, stop loss is down here. So I literally wait, okay? Then the buy entry starts to run now. My trade begins to run and it goes all the way up. So if I had held this position, means if you had had guts to actually hold this position, you'd probably have exited somewhere here with a risk reward ratio of like 3 point what 3.8. That is close to 1:4, meaning you just risked 1 and you have earned 3.8. So if you risked $10, it means you'd have made $38, something along those lines. So if you risk $100, you've made 380. dollars, something along those lines. So then this is how trading is, okay? So you continue, you look for all of these entries, you go, you go, you go. And then if you want to join the trend again, can I now remove this because I've shown you guys? Can I remove it? I think I'm about to remove it now because it's now confusing. If you want to join the trend, remember you have taken profit here, or you decided to come and take profit up here because this market did not close with the bearish candle below this level here. Better yet, you secure profits, okay? You take partial profit and then leave one or two positions running just to add on, okay? Meaning this was part profit. Don't risk profit, otherwise you might give it all back, okay? So now what do? We now wait. We want to catch another buy entry, but we wait, okay? So we wait, we wait, we wait, we wait. The market comes here to 50. Yay. Now we now have a candle that is closed here. Okay. So what do we do? Remember that trade has been closed. This one, we have closed it. We are joining the trend. So this one has closed above. So we are going to enter our buy here. Okay, with our take profit. Okay, it didn't remain behind. So our take profit target up here. We are targeting this level. I like targeting bodies like that. Okay. So you can always go in there and it almost hit. The thing is, I will give you people practical advice. Sometimes the market doesn't come up to the level that we think. That's why we end up using bodies. Like in this case, can you see this red candle? The fact that it's a rejection candle, we come here, we use its body. It's usually a safer area because you are not sure whether the market will go up to the week or what. Okay, so there we go. That's our TP. Then this one was our entry. So if you check nicely, if you watch this properly, where you basically entered from, the market only reversed and touched your position a little bit. Can you see that? So this is a minimum drawdown entry, and there you go. You come out after how many minutes is this? You come out, let's see, your entries here: 1, 2, 3, 4, 5. That's 1 hour 15 minutes, and you've made your profit. Okay, so sometimes you don't even need to spend so much time. Audrey, I am busy. I'm a wife, I'm a mother. Audrey, I'm busy. I'm a man. I am working for my family. It doesn't matter. Okay, in this short period of time you can still make profit. Let's just see our risk reward ratio. I think there's something about me and buy entries. I like buying, eh? I like buying. Who has seen that I like buying? I really like buying. Okay, so let's see. But I do sales like a lot. I'll show it just now. Let's see. There goes. So there we go. There's our risk. There's our reward ratio. Okay. So you see now they're now asking me like account size, lot size, and all of that. So you can also put, let's say your account was 20 bucks, okay, and you had entered here with a lot size of 1. So this thing allows you to 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 also enter your things here and calculate. Let's say you had entered with 1 lot, percentage risk. What's our percentage risk? What is 25%? $4. Aibo. If you risk $4, it means you got 4 chances. But let's just see. Let's just see what happens. Our leverage, Tina, is 1,000, right? On deriv. So let's see. If we're using deriv.